Hello guys, today I'll be diving into the true cost of buying a property in Singapore. If you're new to this channel, my name is Jiawan. I'm a real estate agent in Singapore, and today let's talk about that. So this video is supposed to help you, give you a rough idea of how much you need in order to buy a property in Singapore. And this is just not the down payment and your loan amount. This is everything, that all the nitty-gritty details. So it will give you a very good idea as to how much you have to budget before buying property in Singapore. So in today's video, I'll be breaking down your one-time costs, your recurring costs, and also the timeline as to when you have to disperse the money. So let's say your property that you want to buy is actually 2 million, and here's the affordability assessment. So what you need to know here is how much is coming out from your own pocket or your CPF, and how much is coming from the bank. So if you can see here, if this is my first property I'm going to buy, my LTV will be 75%. So what is LTV? LTV means the loan to value limit. So it's the max amount that a bank is willing to the bank is willing to lend you for the purchase of your property. So when you say the LTV is 75%, the bank is willing to give you 75% of the cost of the condo. So if your condo is 2 million, 75% is 1.5 million. So in this case, I'm able to get 75% limit because I'm younger than 35 and it is going to be my first property that I'm buying. But if you can see from the table, the only way that my first housing loan will be 55% LTV is that I am above 35, because the standard typical loan tenure is usually 30 years. And if I plus my age and 30 years of land tenure, if it's greater than 65 years old, then my limit for the LTV for my first loan housing will be 55%. So it's always good to take advantage of this 75 LTV before you reach 35. Okay, next, since the bank is willing to lend you 75% of the purchase price, that means the other 25% has to come out from your own pocket, be it cash or CPF. But the minimum amount that has to come out as cash will be 5%. So it can be like 7-10% cash, but as long as the minimum is 5% cash and the rest is CPF, then that's okay. So you're wondering how to calculate your buyer's stamp duties or your additional buyer's stamp duties. You can pause this video here to see the formula to calculate your buyer's stamp duty and your additional buyer's stamp duty. Okay, but this 25% is a little bit misleading, because you have to still pay for your stamp duties, your legal fees, and also your agent fees. So, for example, you are buying a resale, you still have to pay your agent. So I would say the cost is maybe about 31% around there. Then you have to factor in renovations, whether you want to do expensive renovations or you want to have expensive furniture. So that all the cost adds up to be about 35% of the purchase price. So always keep that in mind, that when you're buying, at least have 35% of extra cash and then extra savings after that down payment or after that 35%, just to be safe. So now let's talk about timeline, because the timeline for new launch and resale is a bit different. So let's go through new launch first. So let's say I got a good ballot number, I've already picked my unit, now it's my one-time cost. So I have to pay 5% for the option fee, then I have 2 weeks to decide to exercise the option or not. So please take note that if you pay 5% for the option fee and decide not to exercise, you're going to lose 25% of that option fee, which is a significant amount. So always decide whether you're going to commit before you pay for the option fee. So once you exercise the option fee, you receive the SNP, the sales and purchase agreement, and you have a 3-week window to exercise or sign that. So 2 weeks after you sign the SNP, you have to pay your buyer's stamp duty or your additional buyer's stamp duty. Then the completion of that SNP after you sign will take place maybe about a week. So that's when you have to pay your 15% and also your legal fees. So that is the timeline for the first half of the new launch. So once that's done, maybe you see 5% plus 15%, that's only like 20%. But you said 25% comes out from our own pocket. So the remaining 5% will actually come on the phase 2, where the developers will do their foundation works. That's where you send them, or that's where you give the 5% money to the developers. And this one is from your own pocket, so it's not the bank loan. So that's where the other 5% will go to. Then after that, you have to pay 35% of the purchase price during the different stages of the construction. So in my previous video, I really ran through of what percentage will be given at which stages of the construction. So you can watch that video for more information. But let's just say after the construction that you pay 35%, the next stage is actually the TOP. So this is usually the 3-year mark. So that's when you have to pay 25%. And then the last 15% comes a year after the TOP, and that's usually when you get your CSC legal completion. Then that will be the full disbursement of the 100% purchase price. Now let's talk about the resale timeline, which is a bit more straightforward. So let's say you already see the unit and you like it and you want to buy. So you have to pay the seller 1% for the OTP. So once the seller gives you the OTP, you have 2 weeks to decide to exercise it or not. So if you decide to exercise it, you have to sign the OTP and pay the remaining 4% to the seller. After that, 2 weeks after you exercise the OTP, you have to pay your buyer's stamp duty. Then after which you pay your remaining 20% from your own pocket or from your CPF, together with the 75% loan and the legal fees at the completion of the sale, which is usually about 8 to 12 weeks after signing the OTP. Okay, I hope this is easy to understand. So we've already covered the one-time costs. So now let's move on to the recurring costs, because once you buy a property, it's never a one-time cost, it's never a one-time payment. Life will be easy if it's just like that. But sadly no. So let's run through the recurring costs. So these are the main things for the recurring costs. For insurance, it could be your home insurance, but most of the time, home insurance is an optional thing. But the thing which is mandatory, you have to check, because for some banks, they will require you to pay for fire insurance of the home, because your home becomes the bank's collateral once they lend you the money. So they will want to have some reassurance that if anything happens, which is usually like if your unit gets destroyed, a fire would most likely be the reason why your unit gets destroyed. So they would like to have you to pay for the fire insurance. Just in case their collateral gets damaged, they will still have money out of it. Next is your maintenance costs. So this varies from condo. Some condos might be more expensive because due to the limited amount of units, residential units inside. Some will be more affordable because of the number of units within the development, the project. So there's more people paying, so the maintenance fees will be lesser. But this is something you have to check before committing to see whether your budget allows for it, your monthly budget, because this is a monthly recurring cost. Next is your property tax, because your land is not really your land, your condo is not really your condo, it's the government's. So you still have to pay property tax for that every year. So let's run through how much that costs. So for property tax, there's actually two kinds that you need to know. First is your owner occupier tax, which is usually the properties that you're actually staying at. The second is the non-owner occupier, which is the properties that you're actually renting out, so you can get income from it. So you can pause to see the formula. The next thing you need to know is what is AV, annual value, and how to calculate this AV. So AV is actually calculated by the rent. So imagine you're renting out, you're going to rent out your condo. How much would you charge, or how much is the market rate for that condo every month? So annual value is that condo monthly rent times 12. So that is how you get the annual value. Then the next thing you'll be wondering is like, oh, but isn't it very subjective to the landlord? The landlord decides to rent this for this amount. It's not really controlled. So that's a good question. If you actually want to know your actual annual value of your property, your unit, you just have to pay IRAS $2.50 for them to calculate how much your annual value is. Okay, so I hope this video is beneficial for you. So it roughly gives you an idea of how much you have to save or budget before buying your next property. So this is just a framework I like to run through with my clients to make sure that they have enough funds even after the down payment, the legal fees, the buyer's stamp duties. They have at least like a year's supply of emergency funds. And if you want me to run through a report that's customized to your needs, you can call me or WhatsApp me at 93690713 and I'll run through the numbers with you. Thank you for watching and see you again soon.